Yo, welcome back to the channel. Sorry, I've been a bit inactive for the last couple of days. You'll have to excuse my car. I've got some band equipment in here. So I'm going to talk today about how rising interest rates are going to affect the economy. So right now we are apparently in a rising interest rate environment. Whether we stay in one is yet to be seen, because I personally believe that the pain of rising interest rates and the fact that the Reserve Bank of Australia and the Bank of England have basically cried uncle already. The Reserve Bank of Australia's 0.25% rate hike was basically an admission that we're too afraid to move, and the Bank of England has said we're going to print in order to stabilise the economy, is again an admission that they're screwed, in my opinion. So, that being said, if we are in a rising rate environment, what does that actually look like? Well, people have only got so much money for mortgages, and what I'm sort of seeing in like comments on Facebook is that people think that inflation is better to just have inflation than to have a higher interest rate on their mortgage or their rental properties. But where that is flawed logic is that if you allow inflation to rise unchecked, it will rise faster and worse than you think. So, yes, the interest rate of your mortgage might remain low if they just let inflation run wild. And paying the mortgage in inflated currencies might be easier if you had, for example, $1 million mortgage and $1 million buys a loaf of bread. Then, of course, paying $1 million off is easy. But what actually also happens is that the value of your assets, your house might be worth $1 million, but that's a loaf of bread too. You know what I mean? Because what value does the currency have if you allow inflation to run unchecked? Because if you don't get on top of it, you will get hyperinflation. And if they raise interest rates, what is the actual interest rate required to fight this inflation? Well, around the world, we're between 7 and sort of 10% official numbers. We all know those numbers are bogus. But let's say that those numbers are real. Now, in my country, interest rates, I think, are like 3.5, 3.75, something like that. And they expected them to go to 5%. And the myth, the lie they keep selling is inflation's going to peak, or we've reached a peak, or interest rates are going to peak. And every time they make these predictions, the inflation number comes out worse, and they say, well, now we've moved the peak. It's gone higher. And this has happened over and over again. First, inflation was going to peak at 5%, then it went to 6.3, then it was going to peak at, X amount, and they would the cash rate from the Reserve Bank was going to be X amount, and that was as high as it's going to need to go. And this number keeps going higher. But if we look at history, interest rates in the 1980s went from like 17% to fight inflation. They let the inflation sort of go and go and go, and then they said, we've got to deal with this. So they cranked up interest rates to that crazy level. And that wasn't enough. They had to go to 19% from that point. So that was well above the inflation number. Well, what have we got now? We've got inflation at, say, call it 8%, and the interest rate is below that. So how is that going to actually fight inflation? They need to raise interest rates, if they are serious about fighting inflation, much faster, much higher, much more aggressively. And in my opinion, it justifies a 2%, 3%, 4% hike in one go. Because if our trajectory is higher interest rates, we might as well get on with it. And, yes, going harder faster is going to be more painful faster. But what it also means is that you get on top of inflation quicker, and you don't allow inflation to keep going up. meaning, you know, you bring it back down into under control faster. So the rate will cause bankruptcies. It will cause unemployment. But what it'll also do is deal with the problem faster, and so that you can have a real recovery. But in the meantime, you know, you're in for a world of pain. But if your goal is to fight that inflation, and you're allowing the inflation to keep going up and doing these 0.5% points or 0.75%, it ain't enough. It ain't enough. And so you're going to have to keep doing more and more rate hikes. Eventually, what is the number that these central banks say, if they are serious? If they're serious about fighting inflation, if they're serious about fighting inflation, and they say, you know, we're going to fight this inflation, and that's it, then what is the actual number they have to go to fight that? Because as this inflation keeps going up, the interest rate peak has to keep going up. You know, where are they going to peak? Well, then tackle the problem today. Analyze the problem and say, inflation is too hot for this 3%, 4% interest rate. The inflation rate is double that. Unfortunately, we have to double our interest rate. We are going to collapse the housing market. We are going to create unemployment. But what we're also going to do is fight inflation. But they're not doing that. It sounds hawkish when we do these unprecedented moves, but we started at zero, don't forget. And inflation really escalated from a point of zero. And what shocked me at the time was they left rates like this. Now, in my country, house prices went up 50% in a year. So as house prices went up like this, they still left the OCR at zero. And then and they warned of a crash. And then as prices inflated, they said, "Don't worry, it's transitory. It's just a backlog of demand. It's going to go away." Then it didn't go away, and we'll raise rates 0.5%. They were already at like 5 or 6.3% when they started raising rates from 0.25 or some nonsense. So, how high do interest rates actually need to go, and what is the effect of that? So, sorry, just had to stop there for a second. But so, how high do they actually need to go? Much higher. So, what has happened in the last 2 years? House prices skyrocketed. Stock markets went up, and people bought into that. They bought the wrong trade. They made money in a very short amount of time, but unless they got out, they are now facing higher rates of interest. Now, looking at the stock market, I'm very confused as to why that is going up. I have my own theories on that, but why it's going up when it should be, in my opinion, actually going the other way, going down. But real estate is, in my opinion, and bonds are the two most at-risk assets there is. Because one thing that drives real estate prices down is the servicing cost of that real estate. If you increase the cost of that real estate, the price people can afford to pay. And also, you know, when rates keep going down, lower, like the lowest rates I thought I would see in my own country was 3.99, and they went to nearly half that. Right? So as you're in a rate of, it just keeps getting cheaper, house prices just keep going up, like nothing to worry about. But as you like sign a mortgage and go, okay, I've got this rate which is pretty uncomfortable for like 12 months, what if it's worse? Like I'm not purchasing this house to be stuck with like an interest rate that could go twice what I'm paying now. And the signal I'm getting is that interest rates are going to go up. Inflation is going up. The cost of living is more expensive. Everything is unpredictable. Why would I pay $1 million for this house when it could actually ruin me financially? So how much is that house actually going to be worth? What am I prepared to pay to not make sure this is a liability? So I'm going to wrap this video up because we're around the 10-minute mark. I don't want to go too long. But you can see my point is that rising interest rates are going to be far harder to stomach for the market than people actually anticipate. And it's going to go on, in my opinion, a lot longer than people are actually concerned. They sort of think, like the vibe I've sort of had is that this is all going to go away, and that interest rates are going to go to 2% again. Well, I think we're never going to see those interest rates again unless they go back to the printing press and are just going to destroy all the currencies, which I also would not put past the central banks. So I'll wrap this video up. Let me know what you think in the comments. Thank you if you've subscribed to the channel. Thank you for your comments. Thank you for your likes. I do actually appreciate them. It does motivate me. If you like this content, I will put more out based, those likes and stuff. It's like motivates me because we're in the infancy stages of this channel. All right, guys, till next time, peace out.